afternoon. Welcome to the Susie Orman Show. Today we'll be having two fraternal twins from Wyoming. Here they are now.
Hi everyone, my name is Irene.
Maddie, with a Y.
Hello, darlings. How may I help you?
So, we've been hearing a lot about life insurance. I was wondering if you could explain what it is and if we need it.
Sure, hun. Life insurance provides financial security for your family in the case of your death. I'll ask you a few questions to determine the right type of life insurance for you.
Okay, ask away.
Would you consider yourself a risk taker?
Totally! I just went skydiving this morning.
Yes.
All right, great. In that case, I'd recommend variable life insurance. Variable life insurance is for people who understand the risk associated with investing, who are willing to assume that risk, and for those who know their long-term goals. Does that sound like you?
Tell me a little bit more about it, then I can decide if it's right for me.
Well, sweetie, first to understand variable life insurance, you must understand how permanent life insurance works. Variable life insurance is a type of permanent life insurance, which doesn't expire throughout your life. Basically, life insurance is a pool in which you deposit money. This money is there to help your family in the case of your death. It's comprised of cash basis, which is the amount you deposit, the cash value, which is the amount you deposited plus the dividends, and the death benefit, which is the amount that your family receives upon your passing, guaranteed by the policy. The death benefit should cover your debts plus the cost of living for about 10 to 15 years. Additionally, variable life insurance has a greater risk than other forms of life insurance, which means you get a greater return. You can choose from a variety of investment options across different asset classes, such as growth or income accounts.
Cool. Can you explain premiums? Thanks.
Premiums are the amount of monthly payment you pay to fund your life insurance policy. You can choose to make higher or lower premium payments within certain limits.
So, what makes variable life insurance different from permanent life insurance?
Variable life insurance gives you the opportunity to earn more than your death benefit because it is an investment-based policy. This means that a portion of your portfolio is allocated to the investments of your liking. These options include stocks, bonds, or a combination of both. When you first get the policy, you will also receive a prospectus which outlines the terms of your life insurance.
Death.
Okay. Moving on. Let's talk about cash value and death benefit. Death benefit is the amount that is paid to your beneficiaries after your death. This amount is determined when you first purchase the policy, and it is paid to the beneficiaries as a tax-free transaction after the passing of the insured owner. In order to redeem the benefit, the beneficiaries must fill out a death claim form and submit it with a death certificate. On the other hand, there is also a cash value of your life insurance. The cash value is a liquid portion of your life insurance policy. Every time you pay your premium, a certain percentage goes to the cash value, which is then invested into sub-accounts that you choose. These sub-accounts are only available through your life insurance policy, and the cash value of your insurance policy fluctuates depending on how well those sub-accounts or investments are doing. Stock market in free fall, your cash value probably is too. The downside to variable life insurance is that if your investments perform poorly, you could potentially have a lower death benefit. However, cash values generally increase over time.
Is it possible to borrow against the cash value of your variable life insurance?
Certainly, you can take money from the cash value of your life insurance policy.
Does life insurance cost, money?
Well, the first thing that I want to point out is that it's extremely important to purchase life insurance when you're young. This is because you'll need to have a physical examination when purchasing the policy, and the younger you are, the healthier you are. Therefore, life insurance premiums will be cheaper at a younger age. I can't estimate exactly what you'll be expected to pay per month, but it won't be a lot since you two are very young. Lastly, since you are assuming investment risk, you want to make sure that you have enough money and that you are financially secure before you assume that risk.
Can you condense everything into, one paragraph?
Sure, Pumpkin. Your insurance policy begins with nothing in the cash value, and that amount increases over time. portion of the premium you pay each month goes to the cash value. In addition, the cash value accumulates interest. When the investments in the policy perform well, the value can become quite large. However, when the investments in the account are doing poorly, the cash value has the ability to disappear.
Are we done now? I need to go take a nap.
Maddie, don't be so rude. Susie's talking. It's rude to interrupt.
It's fine, sweetie. I was done talking. Thanks for coming on the show. Did my explanation help?
Totally. So we've decided that variable life insurance would be perfect for us. Thank you for sharing your knowledge, Susie.
Thanks.
All right, great. I hope you all have a great night. Goodbye, everyone.